Have you done your own number crunching? What do you think about Steve's numbers and what we can really expect for the rest of this year?
So as Steve says, this is really uncertain. I agree with the direction of movement. My own numbers are unfortunately a lot worse. The IMF numbers that I have here are a lot worse. If you take the year as a whole, the IMF projects minus 7.7% growth for the US. I think we may be at minus 10 to minus 14% growth for the US. This is a big hit. And as you see from the oil market, even the benefits you would expect normally, lower oil price means more dollars in consumers' pockets. Even that doesn't work in this economy. So I'm a little bit more worried than what the consensus of economists out there is right now.
Hey, Mohamed, just over the last month, you get to this crisis point where you hear companies like Neiman Marcus might be filing for bankruptcy as early as today. You hear that with other restaurants, other places. But a lot of the retailers say if this lasts throughout the month of May, then they're going to have to follow suit with that. If they're continued to be closed down basically across the country with no place that they're taking in any revenue, that gets to be a much tougher scenario. So I guess what are the cumulative effects the longer this goes on, and how do you try and figure out some of the black swan possibilities from that?
So that's what scares me most, Becky, is that we are going to have a series of bankruptcies and a series of sovereign defaults. So we are going to see people unable to pay because there's no revenue coming in. You heard that earlier on your show from the former CEO of Saks. Models are not built for no revenue coming in. So the big risk out there is that we get defaults. If you get defaults, then policy has to make really difficult decisions. Who do you bail out and what terms? That's the Treasury. And then on the other side, you have the Fed now in the high yield market. Do they pick names? Do they pick winners and losers? What do they do? So defaults and bankruptcies are a big risk and one that we have to keep an eye out for. Hopefully they won't happen. Hopefully we'll come back quickly. But that is a major risk factor out there.
Hey, Mohamed, do you imagine a day where the Federal Reserve starts buying equities for real?
I don't, Andrew, but I wouldn't have imagined a day in which they would have bought high yield. So, it's out of my own imagination right now. I care about central banks. I care about their integrity. I care about their credibility. I care about their balance sheet. I have no problem them taking on liquidity risk. I have no problem them taking on some credit risk. But taking on default risk in a big way is what I'm worried about. So I don't see it, Andrew, but I wouldn't have seen high yield.
Mohamed, how do we prevent these type of bankruptcies that you're talking about when a very small number of firms gobbled up all the money that was out there already for the PPP? There are lots of others waiting in line, and the minimum loan of $1 million that was originally set up on that makes it so that lots of very small businesses wouldn't even qualify for that money. How do we keep this going? Because the amount of money we've already poured out to this point is, mind-boggling. And then you get to the point where we've got to deal with the states, the municipalities, and then to say, OK, we've only done this for 8 weeks. We need to do it again after that. How do you start getting your arms around the idea that there's not going to be bankruptcies like that?
So that's the problem. We are all assuming this is a one-round game, if you use game theory, that if we just keep them going for 6, 8 weeks, maybe 10 weeks, it will be fine. If it turns out to be a multi-round game, we have to revisit the policy approach. Look, I think it's really important that we're going to replenish the PPP. It's also very important for us to improve the way it functions. Small business are critical, not just to the economic health of this economy, but also to the public policy health issues. So that's critical. I think it's really encouraging that we are seeing Washington move on that. But you've got to make sure it's implemented better. Small business deserve a lot of support. They cannot access the capital markets. They don't benefit from the Fed's support of capital markets. So they have to have a program designed to them and limited to them.
And beyond that, Mohamed, if that's your case, what would actually make you think, OK, things look better? What would be the game changer that could make you say, OK, never mind, this is much better than I thought it was going to be?
The game changer is going to come from 2 out of 3 health issues. I mean, the vaccine immunity is really what we want, but we're not going to get there quickly enough to avoid the issues we're talking about, Becky. So we need to see first better confidence in states' ability to identify and contain the spread of the virus. That's about testing. That's about what's going on right now, just better containment of the spread. And then the second thing we need to see, as important, is treating illness better. And we're getting progress. So we need to see critical mass on 1 and 2, which allows us to reopen the economy safely, avoid a W, which I'm really concerned about. We reopen for economic reasons, for good economic reasons, then we have to shut down for health reasons. That would not be a good idea. So we need progress on these two issues. We're getting there. Every day is a win. Every day we get more information. Every day our scientists are working a lot harder. We just need critical mass on these two issues.